Hello, everybody. Everything Phoenix here. So we're going to dive right into monthly average sales price per square foot, guys. Look at that chart. I know we talked about this multiple times actually on our YouTube channel here, but we're going to keep talking about it because the Cromford's talking about it because it is still the news. You can see right here that the price has continued to increase ever since the low in December of 2022 last year. So in the Phoenix Metro, guys, and it's not because, again, not because demand is so high. Okay, demand is actually lower than it normally is this time of year. It is because supply is so low. Yet that is keeping prices going up, which is not what the Fed wants to see here in Phoenix. Now, there's some other cities, guys, I know that are experiencing this too right now in their marketplace, and with other cities that have a Midwest feel and East Coast flair. Their summertime is usually the busiest time for their housing market, whereas Phoenix come July will typically naturally slow down. That being said, I think you're going to see the Fed kind of disappointed in the fact that a lot of these cities may have increasing appreciation or sales prices throughout the next couple of months of the summer. That is what's very interesting. Now, if I go over here to the Fed, let's jump right into that because we're hitting on it. Let's get right to it. So this is yesterday. This is Jerome Powell and Co., right? And Co., the company, saying they have not raised the federal funds rate, which the markets kind of thought they would. However, they are hinting, if you look at this article, they're hinting that the Federal Reserve actually is hinting that they will probably raise rates 2 more times this year. Don't be surprised if they raise rates 2 more times this year. Now, we're midway through the year, so that could signal that they believe that maybe inflation is getting under control a little bit, but yet prices and affordability are continuing. The economy is continuing to go up, so to speak. And so they will continue to try to stall the economy any way they can to bring down inflation. So if you read this article right here, guys, on CNBC, you can see right now that bringing rates to 5.6% at the end of this year. The S&P finished nearly flat while the Dow Jones obviously dipped. So the markets reacted to this news not too favorably. Primarily, guys, because they hinted that rates will probably be going up a couple times still more this year. So if you read here, right here, it says the hawkish pause, as so many analysts pointed out, meaning that the Fed might still swoop in and with more hikes later this year as the central banks itself projected. So that's what's keeping everybody like, well, you didn't raise rates this time, great, but you're saying you're going to pretty much do it the next couple times here next year. So you're not necessarily saying we're out of the woods and that the economy is going in the direction you want it to go. That being said, it's kind of interesting to see what will happen. So this is all talking about what's going on with the Fed, and it's actually really intriguing, guys. So let's look at rates. What's very intriguing, guys, is that the market is rebounding nicely, and it's not where it was in May of last year, which is the height, but it's rebounded nicely to only be off with the median price point by just a few percentage points from where it was. All right, so you can see right here with the commentary. We can see that the low point of mid-January right here on this graph, guys. Let me just pull this back up here so you can see it, okay? It was $264 a square foot, is no way behind us, and the average sales price has risen to almost $287 on a price per square foot basis as of June 12th. That's a rise of nearly 9% in just 5 months. 5 months. It's equivalent to an annual appreciation rate of over 20%. So you can see right now, if we stay on the same pace we have been since January, guys, we're looking at 20% appreciation. 20% appreciation for the Phoenix housing metro market. That's insane. Now, I don't think that's going to happen. And Cromford is saying that that's not necessarily going to happen, but that's the pace we are on right now. But we're going to hit the summer months, and most likely it's going to flatten out. So we'll see what happens by the end of this year. But as of right now, we are 9 percentage points. Excuse me. I'm getting all excited, right? Appreciation. I'm getting all excited. Oh my goodness. 9 percentage points up this year on appreciation. So again, if you bought a house December and closed on it December of 2022, November of 2022, you're looking pretty nice right now in terms of your return on equity. Now, obviously, if you bought a home in May or June of 2022, you're about even. Matter of fact, you're probably up a little bit, potentially, maybe, depends where you are in the valley, but you took a nosedive all the way through the end of the year, and now you're riding that wave back up somewhat, okay? So what I love is what she says here is this is probably a great disappointment to the Federal Reserve because they want to stall the economy, buyers in general as well, because they want affordability, they want prices to come down, and especially the naysayers, the doom and gloomers and naysayers, guys. Hey, naysayers, just calm down, right? Who predicted the great housing market crash of 2023 is coming. And right now, that's just not happening. However, it should come as no surprise to those who keep track of the conference report. The CMI was issuing strong positive signals in January, guys. And as we talked about on the show, if you follow the CMI, it's going to give you the heartbeat, the pulse of the market. Because remember, it's a Titanic, it's a yacht, it's slow moving. It's going to give you the signals, the indicators of what the market's going to be doing probably about 2 to 3 months from now, if you follow it, because you won't see those results for 2 to 3 months. So you're ahead of the curve by following the Crawford Market Index, okay? All right, and you guys, this is a week ago. So it's not up to speed on this, and it's going to be a little while for us to get updated. But you can see right now, as a week ago, everything is green except for one area of town for whatever reason. It's Goodyear. I don't know why that is. It's down 1%, but it's still a seller's market. All 17 suburbs and the main city of obviously Phoenix is in the green, is going up when it comes to the Crawford Market Index. And boy, Chandler is just leading the way. Look at the Southeast Valley, Chandler and Gilbert. Holy cow. Leading the way, guys. Monthly median sales price. This is good that I get it because I was in a crunch I'm on vacation here trying to just put some stuff together here for this, but this was interesting. Look at this graph. Okay, if you're a median sales price person, which you should be really, because that's more representative of everything over averages, okay? The median sales price. In May of 22, which is the height, it was 480 here in the Phoenix metro area. 480, you can see it right here, okay? And then you can see different dates. It went to 476 in June, and then all the way down October, November, a falling knife, right? December to 415, guys. Went from 480 to 415 in the course of about 6 to 7 months. And then it flattened out, and then it got better. And now as of June 23rd, we're at 445. 445, guys, on a median price June. So we are just 7.3% off the peak. We now recovered nearly 50% of the value lost in 2022. Over 50% of the value lost in 2022. So this is just stats, guys. This is stats. This is data. This is not someone's emotional opinion. This is not a talking head on the news. This is YouTube Live, Everything Phoenix, where we're just going to go and give you facts, give you both sides of the story. You can figure out then what is best for you in terms of what you think is happening. Okay, so guys, you can see right now our market is recovering. Now, I know I put 20% plus question mark right on the advertisement for this YouTube Live, but we don't believe there's going to be 20% appreciation this year. Trust me, we do not believe that. I can't imagine a scenario that's going to happen at this point. But 9% already, and we're probably going to flatten out throughout the summer and maybe even have a little bit more of a gain if nothing changes in terms of supply and demand by the end of the year. So we could be talking double digits of appreciation, 10, 11% by the end of 2023 for the year of 2023. That is the definition of resilient right there, okay? The housing market in Phoenix is resilient. Everyone, and I mean almost everyone, said in December of 2022, the housing market is going to crash. We'll call it 90+%. That did not happen. So I go back to that saying where it comes to, at the end of the day, as long as you know your exit strategy for what your real estate's going to be, your purchase, that's what matters. If you're on contract with your job and you think there's a good chance you might be moved because that contract is expiring in 8 months or 12 months or 16 months, okay, maybe you just rent because that could be the best thing for you. But if you don't have that type of situation where you could choose to live in this area of town or this city, this area of the country for a period of time that's decently long, and or you even have an appetite to where you could even be okay with being a landlord and renting your place out, then again, it goes back to that one saying I say all the time. I'll keep saying it till I probably die, which is you don't wait to buy real estate. You buy real estate and wait.